Okay, this is just a real quick video because I wanted to talk about what I've been talking about for weeks on SPY. That is the overnight high, which was an all-time high that I keep talking about the fact that the market is going to want to test this all-time high that was set in an overnight session. Now, overnight sessions are we look mostly at what happens during regular trading hours. That's when the full market is open. That's when most of the trades happen, especially this overnight all-time high was set at 10 o'clock. So it's not in the after hours session, which is until 8. This was actually set in the overnight session, which on SPY you can only really trade on TD, think or swim. The futures will trade it, so SPY is mimicking what the futures have done there. But it would look the same way on ES if we went there and talked about it there. You've got right here this all-time high on ES that still holds. It was not taken out yesterday, but it still holds, but it's in an overnight session there. So the overnight session, because there's such little volume, you can see the volume down here. There's such little volume, such little real trades going on, and regular retail traders don't have a lot of access to that. At least with equities, you don't have any access to it. So there's some significance, but we also have to take it with a grain of salt. So why did I describe all that? Because understanding the overnight session, the market wants to go there. And people had to trade at this level in order for the price to hit it. And that's how trading works. In order for that price to print, somebody had to buy and sell at that level. So we have multiple prints though overnight. It's not like it was just one print and then right back down. We've got multiple prints here where people bought in order to get those prices. So buyers are stuck here at these all-time high levels. Whenever we have an overnight session, the reason we look at those overnight levels every day whenever we're looking at SPY. Now, sometimes we're in a tight range. Sometimes we're at levels that we've been to 1,000 times before. But as SPY continuously progresses higher, we have to take some note of those overnight levels and then watch them be tested during the regular trading hours. So what we have is we've got a level that was tested overnight and never tested. It wasn't tested the next day. It kind of slowly sold off down the next several days after that, and it did not test this overnight all-time high. Now, an overnight high just by itself is not that significant. We should test it during regular trading hours, but if we've been there before and we don't test it, it's not a big deal. This one is a little bit more of a bigger deal because it is an overnight all-time high, which means the market has never gone there during regular trading hours. So when we look at the charts, and we're looking at what's going on, granted, the market does not have to. There is no law that says that the market has to test every single overnight high that ever prints. It's definitely not a law at all. But what we're looking at is the fact that buyers are there, and buyers are stuck there. When we get to that level, there's a lot of people that are going to want to, number one, take it to that level, take the market to that level during regular hours, or at least after night at some point again. So the market needs to test that level. It needs to test it also because of what's called auction market theory. We have an auction that didn't end. It did not get confirmed during the regular market hours. So we've got some levels there that need to be tested. And like I said before, it does not mean that the market has to test that level. You can see what we've done since then. These balance areas that I've been mentioning here, 387.56 up to 393.15, this area right in here, this is a pretty strong level. As it went up and came back down, it stayed pretty strong inside of this level. Now, we had some sell-offs, but when we see these sell-offs, these what oftentimes are liquidation breaks or could be news breaks, that are liquidation breaks. We can go into the definition of the liquidation break later, but basically what we're saying is these very quick sell-offs that happen that take us lower, these are actually good, natural, base-forming, balancing actions that the market takes. When you see these big dives, and you can see a big dive here and then it came right back up the next day, this is healthy market action. The market should not go straight up. I know that leading into 2020, the market just went straight up. And it just basically never tested the levels below, never really gave firm, regular trading hour test to the market levels that it had just left. I mean, it basically just went straight up with no consequence. And then in March last year, we got that consequence. All those levels that it had left below in the overnight sessions that never got tested suddenly got tested real fast. And that led to a lot of what I call trapdoors below those levels that had never been tested in a regular trading hour session, and now all of a sudden got put to the test, and the market kept pulling price to those levels, those overnight levels that had not been tested in regular trading hours. The market was just pulling price to those levels to test them, and because there were so many to test, there was a lot of trapdoors. And you had a lot of people. I mean, there's other factors in that. I'm not saying that that is the only way that the market acts. Obviously, there was fear and panic. There was a lot of other things going on. But what I'm saying is we can take those things, understand that when those things take place, we can see what levels we expect the market to test. And that's exactly what this is. This is the inverse. This is an overnight all-time high that the market needs to test. It's going to be pulled to those levels. It's just the way the market works. So we tested it pretty well yesterday. We came within 11 cents of that overnight all-time high. But as you saw on the ES chart, this 395.65 is about 11 cents off of 395.76. And so it wasn't a complete touch of that level. Now that could just be a spike. I don't think there was a lot of activity, a lot of volume there, so we don't have a lot of buyers stuck at that level. They were more here above 395.29, 395.50, and so we definitely, going back to yesterday, we definitely tested that level pretty completely. So I just wanted to give that. Now, in all this time, the reason I'm saying that now is because in all this time between, you can see we had, let me back up even more here. So on the far left here, this was back on February 15th. So it is almost a full month before the market went back and tested there. But I kept saying the market's got to test that level. We had a lot of very bearish signs. NASDAQ was really pulling things down. But what kept nagging me in the back of my mind is the market has some untested levels above. So even though we may get some breaks, and we got some pretty solid breaks, I mean, we had some great days for trading puts and getting short. But at the end of the day, the market does what it does. And so we've got to test this. Now for what I just said right there is an evergreen. You can keep that in your mind at any point in time in the market. These overnight levels that don't get tested. And again, we usually see them on the way up. As the market springs up, it gaps up each day and leaves these levels that do not get tested during the regular trading hours session. They get tested pre-market, after-market, overnight, but they don't get tested during the 9:30 to 4 o'clock session Eastern. So it's going to want to do that. So when you see the market spring up and it doesn't test those levels below, keep those levels in mind on your chart because the market's going to get pulled there at some point, even if it doesn't happen in a month. We're seeing the same thing here with this all-time high. The market wants to test it, even though it went lower first. The market wants to test it. It's like gravity. So what you don't do with that is you don't say, okay, well, we left that behind yesterday, so today we're definitely going to test it. It's not how this works. It's just a level to keep on your chart because you know that the market's going to be drawn to those overnight levels that didn't get tested in a regular trading hour session, and it's going to want to test it. So I've got the full analysis for today. Kind of keep this an evergreen for some things to keep as a lesson. I've got a full analysis of today in the SPY analysis channel, and I'm posting this on the YouTube page. So if you're not a part of our trading group already, to get the full analysis each day that we go through, that's spxoption.com is our website. SPYoptionstraders.com also is our website, but the spxoption.com website looks a little fancier right now, so I'm promoting it. But whatever you want to do. Go find us. We have a 7-day free trial to try it out. If you don't like my analysis, cancel me. I don't care. I like doing these analysis, and I like talking and discussing this stuff with other people and getting feedback and seeing other people make good money on some trades. But the key is the analysis. What's going on? What are we doing with this? Where's the market going? How do we react? That's what we got to plan for, is just we know we have some areas picked out. We know how the market should act, and we make a plan based around that. Plans are never 100%. That's why in the scenarios I post at least 3, because there's a few different ways the market can go, even though number 1 is usually what I feel like is the most likely. We got to be prepared and pivot quickly if that doesn't happen. So anyways, hope this was helpful for you guys. Learn a little bit about how the overnight action translates and how we use that information that the market is giving us for some trading intraday. Thank you guys.